this week, the Sensex falls 500 points on Thursday and is down 2% for the week. What does this mean for your stocks? With the entire market in carnage, we'll pick out specific stocks that hold value for you, and Hemang Jani reviews his portfolio. Welcome to All About Stocks. You're watching ET Now. This is a show for long-term retail investors. Now, I know we've had a really rough week at the markets. We've seen carnage in all of our portfolios. We're going to spend the next half hour trying to figure out how to maneuver our portfolios and still make money in this market. We'll also pick out stocks that still hold strong value at these levels. We'll answer your questions and we'll plan your portfolios. Send in any question you have to the email ID at the bottom of your screen. Of course, Ajay is here to give us an update on what happened in the markets this week and what happened to the Indian rupee. Ajay.
Well, it was a very damaging week for the Indian markets. We have gone all the way to almost 5650 on the Nifty, lost 2.5% there. Sensex was down almost thereabouts. Good thing is that we are participating in a synchronized sell-off being seen in the global markets. Not only equities, but commodities are turning weak. Currencies, emerging markets have already turned quite weak. Ever since Fed Chief Kanhaiya has indicated at a gradual withdrawal of stimulus going forward for the U.S. economy, most of the FIs are seen pulling their investments out of emerging markets, and concerns are that this withdrawal will continue, and hence India could be like many other emerging markets on the receiving end. Rupee made a fresh all-time low this week of almost 60 and has raised question mark again whether RBI will aggressively cut rates from here on or not, because it increases the chances of inflation yet again. But currency experts do not rule out a 60 to 62 level also going forward, because it's a more of a global phenomena than just the Indian phenomena. We did see a lot of commentary from policymakers here in India on measures which could be taken up in order to provide some support, and possibly by the end of the week, that's why we saw some amount pullback in the currency. But of course, equities actually ended the week on a very shaky note.
All right, Ajay, thank you so much for that information. Joining us now in the studio to help us understand what's going on with this market and help us re-strategize our portfolios is Hemang Jani, the Senior Vice President at Sharekhan. Hemang, thank you so much for joining us. It's been a very tough week, especially for retail investors. The Sensex losing over 400 points on Thursday alone. Tell us something. We're all seeing our portfolios erode right now. Anybody who's invested in this market is going to see negative returns. How do we know if our portfolio is doing really, really badly? What's moving on par with the market? How do we judge the way our portfolios are performing at a time like this?
Well, clearly, equity as an asset class brings a certain amount of volatility along with it. And if there's going to be a volatility in the market, your portfolio will also have that fluctuation. And one should not get perturbed merely because the portfolio has actually gone down. But what is important to note is that versus the market, if the fall in the portfolio is much higher, let's say if the market has fallen 5%, and if your portfolio falls more than 10%, then you need to look at the composition of the portfolio, whether you are holding the right sort of stock and whether there is a need to rebalance it to bring about some stability.
Okay, let's talk about the stock market right now. The volatility we've been seeing, we've talked about it now for 3 straight weeks. What are we going to do? What's going to happen? How long are we going to see this go on for? What's your medium-term view right now? Are we going to continue to see this volatility for the next 6 months at least?
See, right now we are going through an adjustment of liquidity because of the way Fed has taken the decision to halt the pumping money into the system. Also, we have seen a lot of money being pumped into by Eurozone and Japan for almost about a year and a half. And at the same time, we have seen the fundamentals deteriorating. If you look at the data coming out from China, Eurozone, and even Japan, things are not looking great. So a combination of these two would lead to volatility across global markets, across asset classes. So we are more vulnerable to this because of the dependence that we have on the foreign flows and the high current account deficits. So we think that given the fact that FIs have pumped in already more than $15 billion right from the beginning, some amount of sell-off can result into a damage in the market. But we think that a few more positives which are there, like a much better monsoon, at least in the initial stage, and the fact that the government has actually gone ahead with certain important decisions has not been factored in. So somewhere down the line, you will see some stability in the global markets once this adjustment process is over. And in the meantime, this volatility is actually presenting a great opportunity for retail investors to buy some good quality stocks, because we're seeing selling by the FIs and stocks have corrected about 10 to 15%.
I remember when we spoke earlier this year, you talked about the fact that the FIs were focusing on high quality, large cap, blue chip stocks, which were the absolute cream of our market. Those are the stocks that are seeing some sort of pressure right now because that's where the selling is, which means that these are the stocks we should be focusing on as retail investors. Can you name a few of those stocks for us?
Absolutely. We think that, something like HDFC Bank, HDFC Limited, L&T, something like Sun Pharma, Maruti, even private sector banks like ICICI Bank, Yes Bank, these are the stocks where we have seen that time and again they have performed consistently well. If you look at their operating performance in the most challenging times, it's been very good. And, this is the time when you actually get to buy these stocks at a maybe 5 to 10 to 15% correction, which is definitely, I think, a great opportunity.
Also, let's talk about mid-caps at this point. We've seen carnage in mid-caps, which we always see technically. Whenever there's volatility, we see the mid-cap pack get hurt the most. As retail investors, should we be looking at mid-cap stocks right now at all, or should we be avoiding them altogether?
I think it requires a lot of in-depth understanding and a much higher risk appetite for one to be able to participate in the mid-cap story. People tend to get influenced by the lower price and the high upside potential that some of these mid-caps could potentially offer. But the underlying risk is extremely high, and which retail investors don't have an appetite for. So I think that it makes sense to stay away from the mid-cap stocks unless you have an understanding and a much larger money to put in.
Alright, so this is interesting learning for us, especially on a week like this. Hemang telling us to stay away from mid-cap stocks unless you really have the strong stomach to keep through that volatility. The other interesting thing he told us, the fact that those blue chip stocks he named, I'm going to put them back on your screen right now. He said these are stocks that a lot of FIs bought, they are now selling out. It has nothing to do with the performance of these stocks. The performance has been really good of each of these companies. It gives us as retail investors an opportunity to buy these stocks. That's the advice we're getting from Hemang right now. There are stocks we must talk about this week. One of those stocks is Hindustan Unilever. Now we have a question from Anish who's written in. He has 4,000 shares of Hindustan Unilever which he inherited from his father back in 1991. Now if I remember correctly, HUL was almost at 200 rupees in 1991. He says he has a holding horizon of about 3 or 4 years. He wants to know what he should do now. Should he be booking profits or should he wait on this stock? The stock ended the week at 590. I'm going to bring in Ajay very quickly to give us an update of what happened to Unilever's open offer on HUL. Ajay.
This is a big corporate development which everyone is keeping an eye out for. Unilever's open offer to acquire around 22% stake in its Indian arm, or Hike stake, has gone on stream. It's about $5.4 billion worth of open offer, the biggest kind of seen in the Indian capital markets in its history till now. We are talking about almost 22.5% stake being hiked in phases going forward. Some of the big funds like LIC, Oppenheimer, Aberdeen, all of these are the ones which will decide whether the open offer will be successful or not. But for the retail investor or the HNI, if you look at some of the commentary which is coming from leading brokerages like CLSA or IDFC, CLSA says that the open offer price is quite attractive and recommend investors to sell the stock. IDFC, on the other hand, says that one should subscribe to the open offer. The valuations of the stock looks quite stretched right now, and it's a good opportunity for HNI and retail investors to cash in over there. But of course, I think it takes its own time for whether the large investors tender their share in this open offer or not.
All right, Ajay, thank you for that information. Even two things here. One is a value of 600 on the open offer. Secondly, for someone like Anish who's been holding this stock for generations, is this the time to sell?
Well, it's been one of the best performing stocks. We've all seen the kind of consistency at which the company has performed. I think at least in the short run, the 600 price looks fair, and the valuation wise it looks a little stretched at about 34, 35 times. I think there is a scope for some disappointment over the next couple of quarters, at least on the operating performance level. So unless the company revises the open offer because of the poor response, I don't see a big upside potential, at least in the next probably couple of quarters. But since he has a 3 to 4 year kind of a view, and that company has been doing extremely well, and once the Unilever puts money into this company, it reposes their confidence in the business and the country itself, which is definitely a great news. And with a 3 to 4 year perspective, we can easily hold on to it.
What can he expect from this stock over the next 3 to 4 years on an annualized basis in terms of growth?
I think it's fair to expect a growth of about 15 to 18% CAGR over the next 3 to 4 years. Yes.
All right, so that's positive news for you, Anish. If you can hold on to the stock, it makes sense to hold on to it. We have another question that's come in, and this is our portfolio question. Now remember, every week we pick 2 lucky viewers and we take a look at their entire portfolio. This week, S.J. Golani has written to us. Now this is the interesting thing. In a market like the one we saw this week, this portfolio is still doing very, very well. He has a list of stocks. He sent us that list. He wants us to help him with what to do right now. I'm going to go through the list one by one. 63 shares of Jyoti Labs, which he bought at 126 rupees. The stock went up 80% over the last year. What should he do with that stock?
Well, it's been one of the best performing stock in the last 1.5 to 2 years, and it is also a stock under our coverage, and we like it given the fact that now the company is expanding its product basket in a major way, and there is an aggressive management is in place. We are looking at a growth of about 25 to 30%, and we have set a target of about 260 rupees for the stock in next 1 year.
All right, so hold on to that stock. 136 shares of Tata Global Beverages bought at 136 rupees. There's that deal with Starbucks. The stock went up about 28% over the last year. Hold on to this stock.
Yeah, very good, consistent company, and we think that there is a scope for some improvement in the margin because of the much better output of tea crop in Kenya. And their beverage business is doing extremely well, so easily can hold on to it.
He has 20 shares of TCS bought at 750. A very confident management, a company that's benefiting from the weaker rupee right now. And you prefer it because it's on your portfolio as well. Hold on to TCS.
Absolutely. It's been one of the best performing stocks, and despite the most challenging environment globally, this company has delivered better than industry growth, and we think that the rupee would definitely work to their advantage, so easily you can hold on to it.
Holding on to TCS. 10 shares of Infosys bought at 1900. Infosys ended the week at about 2400. How much more can he expect from Infosys?
Infosys, because of the change of management, some people have turned positive. We think that in the current scenario, it will take at least 2 to 3 years for them to really come back on track. In the meantime, it might underperform. So I would think that it makes more sense to stick to TCS.
All right, stick to TCS. 183 shares of L&T Finance, which he bought at 45 rupees. Stock ended the week at 76. It might be in the running for a banking license. Should he be holding on to this stock?
Yes, it looks to be a good quality NBFC company. Operationally, it's doing pretty well, and additional kickers could come in because of this banking license. If they get it, definitely there's going to be a re-rating of the stock, so he can hold on to it.
All right, Mr. Golani, only one change in your portfolio, but you give the rest of us faith. Now, if you look at that portfolio, Mr. Golani is safely within profits even in a market like this. A couple of things we can learn from his portfolio. One, he's very carefully picked very strong stocks, and he's been holding on to them for a very long time. So if you're a long-term investor and you pick your stocks carefully, a market like this one shouldn't worry you. When we come back from this break, we'll review Hemang's own portfolio. We'll also discuss Jet Airways and Adani Power. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Hemang Jani is with us in the studio helping us with our stock investments. It's time for us to take a look at Hemang's own portfolio. Those of you who are regular viewers of the show, you know Hemang designed the portfolio for us on the 4th of January, which means it's been running since then. Now, the interesting part about this portfolio is meant for a long-term investor with a 3 or 4 year horizon, which means that it's not something we're going to pull out from in the near future. The portfolio right now has an overall loss of minus 6.95%. Let's compare that to the Nifty. That's down minus 5.8% in the same time. which means that it's on par with the broader market. I'm going to give you a list of stocks that Hemang has picked out for us. There's TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Z Limited, Aurobindo Pharma, Specialty Restaurant. That's the list of stocks that Hemang has picked for us and designed this portfolio. Hemang, like we talked about earlier on the show, if you're on par with the broader market, you shouldn't be very worried about what's happening. Are you happy with the returns that you're seeing on the portfolio right now?
Yeah, we think it's a stable portfolio, and the fact that it is just performing in line with the market suggests that even in a turbulent time, the stocks that we've selected are very good. And we think that one should stick to this portfolio, and there is no need to make any changes at this point of time.
Well, this is interesting, and this is what should teach us diversifying across various sectors. The fact that anybody who has even a little bit of IT in your portfolio right now, IT stocks are in the green while everything else is in the red. But I want to ask you about your mid-cap stocks. Specialty Restaurants down about 16%. Z Entertainment is actually up 3%. But does Specialty Restaurant cause you any nervousness right now?
Not at all, because we have seen that the operating performance of the company has been very good, and the kind of plans that they have of expanding into newer categories. We think that the overall growth is going to be pretty good, though discretionary spend has actually come down, but we've seen this company performing extremely well. So I am quite happy with the performance.
Well, so like we talked about earlier on the show, you have ICICI Bank, L&T, Maruti Suzuki, Reliance, SBI. Do you want to average out any of these stocks at these levels?
Well, I think that something like ICICI Bank, which was corrected in the last about 2-3 weeks, could provide a good entry point at this point of time. Even Maruti, which actually corrected from 1700 all the way to about 1500, is a great entry point around maybe 1450 to 1500 levels.
Alright, two stocks to average out on Hemang Jani's portfolio. Remember, he did say if it's moving on par with the broader market, there's no reason to worry there. We're going to continue with these investments. I'm going to give you a recap of those stocks so you can write those down if you're in the process of writing it down. Right on top, TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Z Limited, Aurobindo Pharma, and Specialty Restaurant. If you have any questions about that portfolio, feel free to write to us. We'll bring those questions to Hemang the next time he's in the studio. Alright, we have time for a couple of more questions. Ranga has written in 200 shares of Jet Airways bought at 645 rupees. Should he accumulate more of that stock at this point for the long term? The stock ended the week at 461. That deal is taking some time to get all of its clearances with Etihad. But what do you think is the long-term prospects of Jet Airways?
We've seen that this airline as a space has not been great in terms of investor returns, and the earnings also have been quite volatile because of the high debt and the kind of lumpiness that we've seen in the performance. So overall growth is back on track with passenger traffic registering almost about 15% growth. But we think that once this Etihad deal is done, there is going to be some kind of a pressure in terms of price, because only because of that the stock is really moving up, and I don't see a great upside potential for Jet at this point of time.
So should he be getting out of that stock at this point, adding more? What would you recommend he does?
I think it makes more sense to kind of move out once there is going to be upside, once this finally deal is announced, and move into a better quality, maybe bank or FMCG kind of a stock.
Alright, it's time for us to take a few questions. Suraj has written in 500 shares of Adani Power bought at 62 rupees and 60 paise. Should he hold on to this stock? The stock ended the week at 41 rupees. Now we know the Cabinet Committee on Economic Affairs has approved the coal price pass-through mechanism. I'll tell you what that means. It means the entire additional cost of imports will now be passed on to the consumers of power. It brings down a burden for companies like Adani Power. But Hemang, there are several other things wrong with this company right now. Will this one thing help the stock?
Well, it has come in as a relief because, if they are able to pass through this incremental cost, then definitely, it would help them in terms of margin. But Adani Power in particular has a huge debt of almost about 45 to 50,000 crore, which again is in a dollar-denominated currency. So because of the kind of weakness that we have seen in the rupee, there is going to be additional pressure because of that. The other important part is that though there is going to be some kind of a pass-through, we don't know what is going to be the status of the contract for long-term power purchase agreement that the company has already entered into. There is not much of clarity on that. So we think that this particular sector will remain under pressure. I don't see it really moving up significantly, at least in the next 2 or 3 quarters.
Alright, we have time for another question, and this one is from a woman investor. Lakshmi has written in. She wants to know if it makes sense right now to shift out of Ranbaxy into Cipla. I'm going to pull up the 1-month chart of Ranbaxy, and you'll see how that stock has moved downwards. A combination of the rupee and trouble overseas. Is Cipla a better choice at this point?
Definitely, with the kind of controversy that Ranbaxy is going through, we think that the stock is likely to underperform, and it will take a while for them to really come back on track. Cipla has a much better business model, and a large component of that is coming from the export market and a very strong presence in the domestic market and a high margin business. So we definitely think that Cipla is a better bet.
Well, Santosh has written in. He has 800 shares of Crompton Reeves bought at 120 rupees. Should he hold on to it? Crompton Reeves ended the week at 81 rupees. What's your call?
It's been an underperformer, and with the kind of problems that we have in the power sector, and also the European subsidiary which they acquired is going through a tough patch. So we think that this stock will not have any kind of upside potential, at least in the near term, and it would make more sense to move into L&T.
Alright, more sense to move into L&T. Time for a very quick break. When we come back, stocks are going to talk about IDFC, Allahabad Bank, and RIL. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Hemang Jani is with us in the studio as well. And it's time to look at his report card. Now, what we do on this show is every time we have an expert in who gives us a recommendation on a stock, we track that stock and see how it's doing and whether or not it's hit its target. Now, in January last year, Hemang recommended IDFC to us. It was trading at 120 rupees then. He gave us a target of 153 rupees in 1 year. Now, the stock has crossed that target. It's moved down a little lower now. It's trading at 136. Hemang, thank you for a strong recommendation. What should investors who bought IDFC back then be doing with the stock right now?
They can hold on to it. It's been one of the stable stocks in a sector which is not performing so well. And because of this banking license, there could be an additional positive trigger for it. Though the performance, at least in the next 3 to 4 quarters, could remain a little turbulent because of the kind of issues that we have on the infrastructure sector and the kind of funding that they could possibly do. But the management quality and the consistency of performance is extremely good, and we like it. So any possible volatility or weakness should be used as a buying opportunity.
Alright, so use it as a buying opportunity. Now we have time for one more last portfolio. Bhavanam Srinivas Reddy has written in. He sent us his portfolio. Here's the following stocks, and he wants us to tell him whether or not he should hold on to them or he should sell them. Hemang, I'm going to make this slightly quicker because we're running out of time. Allahabad Bank, United Bank, and Andhra Bank in the same portfolio. All PSU banks not doing very well. They're unimpressive at this point. Would you recommend he holds on to any of them?
Definitely, I think it makes sense to move out of these 3 banks.
All 3?
Because there is an issue with the smaller size PSU banks and the kind of NPLs and related issues that are there. It makes more sense to combine these 3, sell it off, and move to a stable stock like a State Bank of India. We think that eventually over a period of time, State Bank will perform much better compared to these banks.
For the last stock on his list, he has 10 shares of RIL which he bought at 745 rupees. It's been trading very range bound. What should he do with that stock?
It's been it's been moving in a range for the last almost 3 years, and we think that the downside from here on is very limited. Upside could not be more than maybe 15-18%, given the fact that the refining margins are going to be under pressure. But overall, we think that valuation perspective is looking quite interesting.
Alright, so he should be holding on to that stock?
He should be holding on to it.
Alright, hold on to RIL for the long term. It's time for us to wrap up and say goodbye. Hemang, thank you so much for joining us in the studio. Hemang Jani helping us with our stocks. Send in any question you have. Email ID is at the bottom of your screen. And remember, don't panic. Measure your portfolio with how the broader market is done, and then see if you're in good, strong stocks. Thanks for watching. next.